Well, good evening, everyone, and welcome to the Brian Crombie Radio Hour on Saga 960. We're going to talk affordable housing tonight, and we've got Scott Beyer, who is an urban affairs analyst. He writes for Governing Magazine, Housing Online.com, and the Independent Institute, and he owns Market Urbanism Report, a think tank that's dedicated to urban policy reform. Scott, welcome to our show. How are you tonight?
Thank you. I'm good for having me, Brian.
Thank you. So we're going to talk primarily affordable housing and urban affairs issues. And some of the ones that you're most interested in and passionate about are transit and civic governance, I understand.
Yes.
Excellent. So tell me, what's the problem with affordable housing and what's your solution?
Well, the problem with affordable housing is that it's not affordable. I mean, really, it's not the affordable housing problem. It's the housing problem and the lack of affordability that I attribute to the fact that housing is in short supply. And so the main reason that I think of it as being unaffordable is that it's one of the most heavily regulated industries in the United States and probably in Canada as well, I would assume. And the government regulations that are restricting housing supply make it very unaffordable.
But why do we have all those government regulations? Are they to much benefit?
Well, they were initially proposed for a number of reasons. Here in the United States, for example, the reason that we had zoning was the idea of municipal zoning was passed at our Supreme Court in 1926. And the rationale was that it would preserve quality of life in cities and separate incompatible uses such as residential and industry. But at this point, I would say that no, the regulations have metastasized beyond what they really need to be. And so I think if you were to do a cost benefit analysis of any number of these regulations, what you would find is that they have very nebulous and sort of ill-defined benefits, but they have very obvious costs. That being, on one hand, they're costly in the sense that they create a housing shortage, but also the housing that does get approved after they've gone through all these regulations ends up getting passed down onto the consumer. So the price of housing ends up increasing by quite a lot.
And in Toronto here, Jane Jacobs is the person that so many people refer to, and she talked about how organic communities that develop are actually the communities that most people want to live in. And it's almost as if the planners and the zoning and all the regulations is doing our towns and cities a disservice and creating the places that we don't want to live.
Yeah, I'm a huge Jane Jacobs fan. She was very inspirational in my work as well. And yeah, the types of neighborhoods that she was describing were very much a pre-regulation neighborhood. So she had very positive things to say, for example, about Greenwich Village in Manhattan, or maybe like the Castro in San Francisco, the types of neighborhoods that were built before the rise of all these regulations. So they were built with mixed uses. They were built with the buildings coming very close to the street. And obviously, they oftentimes didn't have height limits or other types of regulations that police the design of the building. And so if you compare the types of neighborhoods that Jane Jacobs glorified with the type of neighborhoods that we are legally allowed to build nowadays we have to have parking minimums and setbacks, height limits, design review, and various other things that basically prevent these types of urban neighborhoods.
So it's almost as if government thinks they know best. Do they know best?
In my opinion, no. I think that who knows best is a combination of the consumer, because consumers, if you have 1 million consumers, you have 1 million people who have slightly different preferences. And so I can't really say that any one person knows best. Everybody just knows their preferences. And I think if you were to say who knows best, it might be the developer or the provider who builds to the consumer's needs. And that's a much more organic system and the type of system that fits everybody's diverse sensibilities as opposed to any one person or entity knowing best.
We're chatting tonight with Scott Beyer of the Market Urbanism Report. We're going to take a break for some messages and come back more with Scott in just a minute. Stay with us. Welcome back to the Brian Crombie Radio Hour, Saga 960. We're chatting tonight with Scott Beyer. He is an urban affairs analyst. He writes for numerous different publications, including Governing Magazine, HousingOnline.com, the Independent Institute, and he owns something called Market Urbanism Report. It's a think tank dedicated to urban policy reform. Scott, maybe I can ask you, what is market urbanism? It sounds like an interesting name.
Sure. So market urbanism is the cross between free market policy and urban issues. Market urbanism is a growing movement in the United States and really around the world to try to bring libertarian, classical liberal, free market ideas into cities. And so I really break down market urbanism in two different ways. I'd say on one hand, it's somewhat of a philosophical inquiry. We're asking things like, how would cities operate if they were fully private and they did not have municipal governments per se to provide their services? And the reason I call that philosophical is because I think that scenario is pretty rare around the world. Most big cities in the world are not privately run, they're government run. But on the other hand, I define market urbanism as an actual policy package of ideas that can be used more pragmatically and that can be fit more appropriately in our current political context. So it might not be full-on privatization or libertarianism, but it's a set proposal of policy reforms for housing, transportation, and city administration that kind of push in a market-oriented direction.
Okay, so what will you do with zoning regulations? Just get rid of them all and allow what will be built? You know, lots of people have compared Houston to other cities in North America where, from what I understand, and you will know this far better, there are not many restrictions in zoning regulations. And what we've got is some of the worst suburban sprawl of any city in North America, I understand. Is that at all true?
Well, yeah, and there's a lot to unpack there. So I think a market urbanism purist would say do away with the zoning entirely. I think a more moderate type of market urbanist, or just the general urbanism movement in the United States, might say don't do away with zoning entirely, but create a more maybe make zoning better and loosen it in ways. So yeah, you bring up Houston, which is very often a case study in market urbanism, and I get that question all the time. And what I would say about Houston is that in net, it is the least regulated city in the United States, in the sense that it builds the most housing and it has the loosest land use regulation paradigm overall. In fact, it doesn't have any zoning. And so the good thing, I think to say it's just sprawl is kind of reductionist. So I think Houston actually does quite a lot of things well. On one hand, it grows very quickly. It has a lot of population growth, and yet it has managed to stabilize home prices. And the reason is that it just builds a lot of supply. So the market there stays elastic. The amount of housing can match the demand in the city, and that helps to cool prices. Now, where I don't think Houston is necessarily a perfect model is that it does in fact have a lot of regulations still, maybe not as many as other cities, but it has a lot of regulations that prevent, particularly in the infill areas, particularly in the core city of Houston, there's regulations still regarding parking and setbacks and the number of units that can go on given lots. And there's also a system of private deed restrictions, whereas the suburbs of Houston are much more liberalized and open to growth. So I think a lot of the sprawl, if that's going to be your most specific critique of Houston, a lot of the sprawl is because the suburban areas are less regulated than the actual city core.
But doesn't that prove the point that if there's no regulation, you end up getting a whole bunch of sprawl?
Well, except I'm saying there is regulation.
But the regulation is in the middle where you're saying there's not sprawl.
Right. Well, I don't think there should be regulation in the middle. In other words, the infill areas, the regulations within the infill areas prevent more housing from going in the city. And so okay. I don't view that as a natural market. I view that as a distortion created by government. Just to give an example, so I believe about 25% of Houston City proper has private deed restrictions, and those are actually I call them private, but they're actually backed by the city, and they're artificially strengthened by the fact that the city is effectively enforcing them. And so, in most deed restricted neighborhoods in Houston, it actually does have kind of a suburban sprawl aesthetic. There's very tight regulations about mixing uses and building a certain number of units on given lots. And so that creates a distortion that actually prevents more density and more infill housing from going in the city and ends up sending the growth out to the suburbs.
So it's interesting because you've described the housing business as one of the most heavily regulated businesses in North America. And, it's kind of surprising because it seems like one of the, developers are some of the most capitalistic oriented people. Why do we need to have regulations for parking and setbacks and height and have design planning departments that actually get involved in what materials you can use?
Well, I don't think we do. And so developers may be the most capitalistic types of people you can think of, but the regulatory paradigm that they're going up against is not capitalistic in the slightest. As you say, so if you were to compare the development business, say, to the food business, we don't have planning departments to determine what kind of food can get grown on which farm and in what volume. And we don't have planning departments to determine how it's going to be processed and shipped. And once it reaches the grocery store, we don't have regulatory bureaucracies to determine the price of a can of corn, or we don't have price controls on food. But for some reason, we think that we need to have all those types of regulations on housing. So, and it really starts from the beginning. It starts from the point that an empty lot is improved and effectively gets its permitting and becomes improved and cleared for development, all the way to the end of the process where the unit is getting sold, and it's oftentimes being the price at which the unit can be sold is regulated as well. There's like regulations permeating through the entire process. I don't think it has anything to do with the developer. If the developers could do what they want, they'd probably just build by right. But it's the government that is coming in and creating all these regulations.
So tell me, please help me understand, why supply demand markets work in all other segments of society. And yet, as a society, we've decided that it doesn't work and needs to be heavily regulated in real estate. Is it just because of this desire back whenever to separate out industry from residential?
Yeah, well, so I think it's a couple things. I'd say if I were to do the charitable version, I'd say that yes, those early regulations, zoning and private covenants and the like, that were ultimately legalized and spread throughout the different cities in the United States, they did have, I think people had a basis for advocating for them, and it did have to do with the separation of uses and the perceived quality of life of allowing certain types of developments as opposed to other types of developments in your municipality. So it did come from a certain justification. But I think where it metastasized and it really went wrong is in the rise of NIMBYism, which really came about in the 60s and 70s. It was something that had very much, that was combined with the environmental movement in some respects. And it was basically the sentiment that we shouldn't have any growth, and that allowing rising populations and rising amounts of growth in your city is somehow harmful for the environment and harmful for the city. And so I think that's the status quo we have nowadays, where we just have a NIMBY political climate. If somebody comes forward with a development, and I don't even mean like a market rate developer is going to get rich type of development, but even if say if a developer came forward with a tax credit project and they said, you know what, 100% of the units in this development are going to be affordable and are going to serve the extremely low income or homeless, people will even oppose that. And I think it's because there's this broader climate of NIMBYism that was first established by the regulations, but then people took it to the nth degree and really really made it a way of life and way of policy within cities.
So given that, and frankly, given that, you've got zoning regulations that some people will then come and with NIMBYism want to be even more restrictive than the existing official plans or zoning regulations might allow, how would you ever change anything?
Well, you can't. And so I think how do we change this is a good question. And in a lot of cases, the existing regulations do not allow change. And then there is an existing layer of kind of community blowback that prevents anything from being changed as well. And so a lot of what we're arguing for in market urbanism is the idea of taking zoning and planning authority outside of the local level and bringing it to the state level. And so in the United States, there's a number of state bills, specifically in California, once passed successfully in Oregon as well, where they're saying we have to make land, there has to be a certain level of by right allowable construction of land all across the state. So for example, Oregon has outlawed the idea of single family zoning, or the idea that you can only zone for one unit on one parcel. They're effectively saying that is restrictive and it has all kinds of unintended consequences that harms the poor. And so that type of zoning is illegal. At bare minimum, a community has to allow at least 2 units to go on any given lot. And so that's a state law, and it takes the power out of the localities and makes a larger philosophical point that there should be a certain by right amount of development on any given lot.
So it's interesting. I'm not sure if you're aware, but in Ontario, we had an Ontario Municipal Board, which was a provincial, the equivalent of a state-run regulatory authority that was the final reviewer of any dispute on zoning. And a lot of the municipalities objected to that. A lot of the local politicians objected to that and wanted to have greater control. And so therefore that was done away with, and the control was given back to each one of the municipalities. And a lot of the urban affairs columnists said that the problem was when the OMB was there, the Ontario Municipal Board, local politicians didn't have to grow up because they could side on the side of the local NIMBYs, and they knew they would be overruled by the provincial regulatory authority that would allow the development to go ahead. But now that they're the ones that are making the decisions, they got to grow up and actually make adult decisions for the developments that they want to have take place. What do you think of that?
That's quite an interesting explanation. My argument is that I don't think the politicians are necessarily ever going to grow up and make the adult decision. And the reason I think that is you really have to look at incentives, financial incentives, political incentives, and just incentives, period. So at the incentive level, if you look at the local level, a lot of local politics is dictated by homeowners. And that's generally a cardinal rule, I would assume, all over the world, which is that people who are renting in a community may not be as politically engaged as people who are who own homes in a community. And so what ends up happening is the homeowners don't have a financial incentive to allow more home construction, because by stifling the construction, their own home values go up because it's preventing competition. And it's also just preventing new people from moving into the community, so they can have the community all to themselves and not allow any growth. And so there's a fundamental financial and maybe lifestyle incentive, if you're a homeowner in a city, to stop home construction and prevent other people from moving there. And so the politicians are really just reflecting that. Even if a politician, quote unquote, wants to grow up or do the right thing or approve the housing that they know they should approve, at the end of the day, they're answerable to the homeowner constituency that is the main political bloc in their city. And so their political incentive is really to be NIMBY as well. And I don't really ever see that reversing. I just don't see it. And that's why I think that the power for this needs to be taken to higher bureaucracies. And some people even argue that here in the U.S. we ought to make it a federal protocol, that any amount of grant money that the federal government sends to localities needs to come with the attachment that, or the condition that they loosen their zoning. And so may sound extreme to some people, but I would very much, as long as we're going to have federal grants, I would support that idea as well.
So who has done this right? You say Houston is the least regulated city. Are there any other examples worldwide that you look at as places that are doing it right?
Well, in the U.S., there's more than one. There's more than just Houston. In my own analysis, I've divided different metros as being elastic or inelastic, and so the inelastic, slow growth metros tend to be the coastal ones like Portland and San Francisco, New York and D.C. that generally do not build to meet their demand. But generally speaking, there's also 6 or 8 really good elastic metros. It's not just Houston. It's places like Atlanta and Phoenix and Dallas that, if you look at the figures, they just build a lot of units relative to their population and relative to their growth, and they manage to sustain price, to stabilize prices. Now, to your point, most of it is sprawl. I mean, an awful lot of it is sprawl, because regulations still do exist in those cities as well, and maybe there's a certain consumer demand in the United States for sprawl as well. And there's a whole incentive structure as far as the way we build roads and the way we extend infrastructure that makes the areas more sprawling. So yeah, in the United States, there's 6 or 8 of what I would call elastic metros. And then I think a good example globally would be Tokyo. Tokyo has in fact, they already went through this philosophical debate of taking the zoning out of local control and making it national. So they actually have national zoning that is far more permissive than any local zoning would ever be. And they build a lot of units. They build well over 100,000 housing units per year. And despite growing, they have managed to stabilize prices pretty well compared to comparable metros like Singapore and Hong Kong.
We're chatting tonight with Scott Beyer, the Market Urban Report. We're going to take a break for some messages and be right back in just a minute. Stay with us. We're back with Scott Beyer, Market Urban Report. We're chatting about really, it's almost decreasing regulation, privatizing, making more libertarian our municipal governments, which is kind of interesting. And Scott has been arguing that the real estate business, the housing business, is one of the most regulated businesses in our economy, and that really it's not doing us a favor. It's leading to unaffordable housing and allowing NIMBYism and should be somehow changed. And that's kind of interesting. But Scott, you also mentioned that you're interested in transit. How would you change transit? Would you privatize transit? Can we? Isn't it a natural monopoly?
Well, it's a combination of things. So I think that a lot of the blowback I get to housing, to my ideas on housing, are people who are effectively saying, well, if you're calling for this idea of urban density and concentrating all kinds of housing in cities and making everything like Manhattan, what's going to happen to the traffic situation? Because here in 2020, most people drive, and it's just going to create this huge tragedy of the commons. And my answer is that no, I actually don't think it would necessarily lead to that, but it would require managing our transportation grids differently, and particularly managing them on market principles. And so that could mean a number of things. And really, there's probably 2 main things that I would say it means. One way to better manage transportation through market principles would be having market pricing for right-of-way. So a lot of the congestion, both in a lot of the parking nightmares and traffic congestion that you see in cities around the world, is because they do not price the right-of-way. So if you were to price roads, it would help disperse and mitigate the demand a little bit and help spread it across different parts of the day as to relieve congestion. And then I think part 2 of the market.
Sorry. So this is what, tolling roads or somehow pricing roads and also having differential pricing during the day on roads?
Exactly. I would call it dynamic pricing. And so it's not just tolling. Tolling is something that is applied to highways and freeway and major thoroughfares. And so that would be one component of it, but it could also be what they call cordon pricing or congestion pricing, which is finding specific areas in the city that are particularly busy and charging to enter them at specific times of the day. And yes, I like the idea of dynamic. So increasing the price of road use based on the time of day and the level of demand. And what
so you're standing in front of a picture of Manhattan. So you would have some process where you would charge people before they enter the island of Manhattan, and or what? If they're driving up and down a street, you would charge them through some sort of electronic tolling means?
It could, yeah. And Manhattan is about to get that, I believe, in the next year, is the idea of congestion charging for Midtown Manhattan, which is the busiest part. But yeah, also charging for the bridges that, for example, there's several bridges connecting Manhattan with Brooklyn and Queens. Those are not currently tolled. I think those ought to be tolled because they're generally very busy. And they also, when automobiles go into the center area, they have externalities. They commit pollutants, and they're hazardous for pedestrians and create a lot of noise and everything like that. So I think we have to take these things into account, that all this single occupancy automobile use is creating externalities on the people who live in Manhattan. And so I think that the other component, besides just charging for right of way, is also having a private system of transit. Here in the United States specifically, we think of public transportation as something that needs to be run by the government. And a particular market urbanism critique is that the government does not run it particularly well. And there are all kinds of examples of private run transit all over the world that move people much more cheaply and efficiently. And so this paradigm where we subsidize single occupancy auto use, but we kind of mismanage and neglect the idea of mass transit, I think it's something that should be reversed and also can be reversed if we just allowed the market to work.
Okay, so we're going to price roads, and you're going to privatize or allow privatization of transit. Is there a place that does this currently?
Well, there's a lot of places that do privatization of transit, and there's a lot of places that price, or a smaller number of places that price roads, and it's not the same places. So an example of some cities that have done really good road pricing schemes are Stockholm and London and Singapore. And basically what happens is they generate a lot of revenue through their road pricing, and their road pricing has been found to increase transit use and really get people out of single occupancy automobile habit. Now, there are other different areas that are really good with private transit. I visited Mexico City last year, and I was really impressed by their private transit. They basically have a network of small minibuses called Paceros that cost $0.25 to ride, and they're flex route type buses that cover this huge sprawling city and have really short headways and really great coverage and get people where they need to go cheaply. And that model, that small minibus model, which is kind of what we're getting at with Uber and Lyft, but Uber and Lyft haven't quite scaled to that. But this minibus model exists all over the world where it has been allowed. And my fundamental argument is that if a place like New York City just liberalize, which effectively makes this kind of transit illegal at the moment, if they just liberalize this industry, there'd be little minibuses going all over the city. And so you'd have much less of a need for car ownership and the parking of the cars, and much more of a industry and much more of a consumer base for these microbuses.
So the government of New York has a huge investment in the transit system, the subways and buses, et cetera. If they allowed all these little minibuses, wouldn't they be economically destroying their own business?
I think destroying is a strong word. So you had talked earlier about whether the government has a natural monopoly for transit. I don't think it's a natural monopoly. I think it's a forced monopoly. They decided, and really this dates back more than a century in the United States, they decided that they were going to regulate the jitney market and the private bus market, and they were going to eventually give a protected monopoly to the MTA and say that the MTA is the only way you can get around. But to me, that's fundamentally antithetical to the idea of freedom and the idea of cities. I don't think that government transit agencies are particularly good at getting a large portion of people around. They might be useful for servicing certain routes that the private market would not service, but to say that to leap from there and say that they should be the only provider and that any competition to this monopoly should be outlawed is, to me, not a recipe for very good mobility in a city.
So I'm chairman of an organization here in Toronto called Transit Alliance, and I had a mayor once say that there's no transit authorities anywhere in the world that make money. And then I had a consultant to the transit industry that said, no, I can show you a whole bunch in London, England, and Europe that make money. Can private transit authorities make money?
What do you mean? Can public transit authorities make money?
Public or private? Can transit authorities, public or private, actually turn a profit rather than have to be subsidized by the government?
Well, private transit companies can absolutely make a profit. We see that all over the world. I mean, I think it's probably just a matter of a decade or so before Uber and Lyft make a profit even. As far as public transit authorities, most of them don't make a profit. I think it's a little bit tougher for them to, but it can be done. So MTR in Hong Kong began as a public authority. They sold some. They went public and sold some shares, and so I believe they're 1/4 private now, private owned as well. But that's an example of a rail and bus agency that is actually quite profitable. And part of their business model is that they're not only a transport agency; they also own a lot of the adjacent land around the stations, and so they employ a method called value capture, where the money that they generate from the surrounding developments is sunk back into the actual operations of the rail and bus. And that makes even if the rail and bus weren't profitable unto themselves, the company at large is profitable because of its real estate assets. So that could be.
So this is in Hong Kong, where they're exploiting where they put routes and stations to make real estate development profit.
Yes. Yeah.
Fascinating. So we've had an interesting dispute or discussion here in Toronto where planning a new line for our subway system and choosing where to put the stations. And the issues in this one station in particularly, there's an opportunity to put it right beside a existing development that's got a big retail establishment and a bunch of condos, or a short way away in a very large, sizable piece of property that is undeveloped and slated for a massive redevelopment that could make a ton of money. And that redevelopment would have far greater opportunity if it actually had a station. So the question is, do you put the station where the existing users might be and there's no value increment to capture because it already exists? Or do you put the station in a vacant spot where you can get a huge value increment? What do you think of that?
Is the vacant spot owned by the transportation agency?
It's not.
Yeah, I would tend to say you put it where the people already are then. And if the transportation agency doesn't happen to own the land, then
it doesn't own it, but you could put in a tax increment financing bill. You could capture some of that value from the developer.
Well, I would say either, really. I mean, Toronto is a bustling city, and I think it would the investment would be justified in either case. But I mean, really, the key is you got to then develop that land very densely, because that's what's really maximizing the public investment then. And so we have this issue here in the United States. For example, Bay Area Rapid Transit, which is the rail system that serves San Francisco and its suburbs, they actually do own a lot of the land right near the stations, but they are not allowed to develop the land, which would actually be great for their bottom line, because they're a fiscally struggling agency anyway. It would be great if they could develop the surrounding land very densely, but they can't because of the surrounding the NIMBYs and the regulations. But I mean, yeah, anytime you're putting all kinds of investment into mass transit, you should build as densely as possible around it to recapture the value, irrespective of who owns the land.
Let's come back to sort of the private public nature. I understand that there's something like 13 or 16 different private companies that are involved in transit in London, England, and they all operate somewhat together. And the Oyster card is something that allocates revenue between all of them. Do you know anything about that?
I know a little bit. I know that they privatized under, I believe it was actually, it might have been after Thatcher. It was in the 90s, and they privatized the rail system and the bus system as well. And from what I understand, a lot of private companies kind of swooped in and made it a competitive marketplace as opposed to a monopoly. And ridership went up quite a lot. Some of the more peripheral lines actually went away or had drastic service reductions, which is what you would expect in a privatized system, and maybe an argument for having the government bail those lines out. I'm not really one to say, but it sounds like the privatization in London ended up causing a lot of increased services and more profitability within the services.
Privatization led to increased servicing.
Yes.
Really?
Well, no, it led to increased services where the population actually existed. And that led to the rush of companies to serve people as opposed to having the monopoly serve people. But it led to, from what I understand, decreased services in the peripheral areas that were not profitable.
What about on major infrastructure investments? You think about high-speed rail or a new tunnel from Manhattan to Queens. Don't you need to have a government subsidize those kind of major investments?
Yes, I would agree. And I think so. That's why I'm not absolutely against that's not why I'm full on privatization. And I'm not fundamentally opposed to the idea of government transit. I think that in some cases, you do need government centralization to figure out things like right-of-way and taxing the general public to be able to fund something. And particularly when you're talking about big projects like heavy rail projects that go underground and need major right-of-way easements, you probably do have to have some government organization. Now, there are exceptions. I mean, here in the United States, we're also having a number of of privately financed high-speed rail projects that are managing to carve out right-of-way and get built as well. So, I mean, it really could be a combo, but I'm not against the idea of the government funding some transportation projects, but I also think that liberalizing other aspects of the market would lead to improvements as well.
We're chatting tonight with Scott Beyer of the Market Urbanism Report. We're going to take a break for some messages and come back with some concluding comments in just a minute. Stay with us. Welcome back to the Brian Crombie Radio Hour. We're having I think, a really interesting conversation tonight with Scott Beyer of the Market Urbanism Report, and he's explained that market urbanism is really allowing far more regular economics into the system in urban environments. He thinks that the home building business, the real estate development business is one of the most regulated industries, and thinks that NIMBYism and municipal government control has forced a situation where we don't have affordable housing. And he also suggests that we can have a lot more private enterprise and profitability-oriented thinking in transit. But then, Scott, you also said that you thought that some of your principles apply to civic governance itself. Explain, please.
Well, yeah, so I could give an extreme version and a less extreme version. I think the most extreme manifestation I've seen of this is the private cities movement. So there's a number of entrepreneurs who really around the world who are trying to launch the idea of private cities. There's one being built in Honduras, I believe, and a number of other places. And this would be kind of like an HOA on steroids, where effectively everything that every aspect of a city government that we normally think of as being public would be private. And so that's kind of like an extreme version of market urbanism. And I'm really going to look forward to seeing how those cities unfold if they're built. I think a more moderate version of market urbanism is the idea of just privatizing or maybe having public-private partnerships for normal city governments and everyday cities. So, for example, if a given city has a municipal trash collection department that is kind of inefficient and maybe backwards in its technology and not really up to date on providing the best service possible, maybe that city should think about disbanding that department and contracting, having an open procurement system where different trash collection private companies can bid for the right to provide those services, and the city pays them based on whether or not they do a good job. And so I think that would bring more private sector competitive principles into the city service provision process, as opposed to just having the government provide things.
Why do you believe private enterprise can do a better job? Like what is it about profit that or the private enterprise that makes it more efficient?
Well, I think for one thing, you're avoiding a monopoly. So, I mean, I'm a big believer in public choice theory, which is the idea that when the government runs something, they're not necessarily following the incentives that are going to make them do a good job. They have oftentimes public agencies have a competing set of incentives that kind of like that prevents good outcomes. So, for example, just to name one quick example, the New York MTA, people have been saying for years that they ought to automate their trains, which is entirely doable technologically. But the labor unions do not want to automate the trains because that means less jobs for them. So that's a classic case of public choice theory rearing its ugly head and preventing good service provision in the real world. Whereas I think with when you have, say, 5 different companies competing to provide that service, they're going to try to reduce their cost and make themselves as efficient as possible. And that's what's going to win them the contract. And so I think that incentive for profit in business ultimately is going to make them be efficient.
So we've talked about regulation in a lot of different areas tonight. I had one individual on my show who suggested that part of the problem with affordability was that governments were telling home builders what they could build and what they couldn't build, but also just the process took so long that the time value of money was such that, and the risk of getting approval was such that the cost got inflated quite significantly. And then finally, this person suggested that government regulation forced us either to build single-family dwellings, suburban sprawl, or big condominiums. And he said that the typical suburbs were like 6 units per acre or less, and the condominiums were typically like 100 units per acre or more. And he says, but the communities people really want to live in, and you mentioned, a couple of examples in the United States. In Canada, the examples would be Yorkville or the Beaches or Port Credit or Blair West Village or something like that, Kitsilano in Vancouver, are 20 to 40 units per acre. And they have laneway housing, they have townhomes, they have a whole bunch of different mixed use. And there's a convenience store or a shopping store on the block rather than having to drive a couple miles to it. What do you think? Are we messing up where we want to live by this regulation?
Yes. So we have a term for what you're describing here in the U.S. It's called missing middle. It is the type of development between the skyscraper and the single family home, and we're talking things like townhomes or Brooklyn brownstones or Philadelphia row housing, things of that nature. And yes, those are outlawed in our current codes. I think the big separation that's going on there is most cities are zoned for single family, but if you want an upzoning, you have to apply for a special use permit, which is a very onerous process that can take years and cost the developer millions of dollars. So if the developer is spending all this time and money to get a special use permit, they're not then going to go from a single family zone home to a 3-unit townhome. They're going to try to build a skyscraper because that's the only thing that makes it pencil based on everything they've had to go through. And so I think that's some of that discrepancy you're seeing between the extremely low density and the extremely high density. But our financial and regulatory structure does not allow very much in the missing middle.
We've been chatting tonight with Scott Beyer of the Market Urbanism Report. Fascinating conversation that is looking for deregulation, less government monopoly and bureaucracy and mandated regulations in the housing sector, in the transit sector, and in, frankly, civic governance itself, whether it be contracting out garbage, or I presume, Scott, we could have a conversation about a whole bunch of different things. And I got to end by saying that I think Scott's completely right. I think that we have far too much regulation in our municipal systems, and to not a lot of benefit. It drives up the pricing of housing. It makes it unaffordable. It probably creates more urban sprawl, suburban sprawl than we would otherwise have. Insisting that we then have to build more expensive highways, insisting that we then have to build more transit. It's a self-fulfilling prophecy that we end up having cities that are spread out, more expensive from an infrastructure investment standpoint, and frankly, in the end, less livable. So I think we got to listen to Scott, and maybe Scott's got the answer. Scott, thank you so much for joining us.
Thank you, Brian.
Appreciate it. Well, that's our show for tonight. Thanks for joining us. I'm on every Monday through Friday at 6 o'clock on 960 AM, or you can stream me online at www.saga960am.ca, or you can go to my website, briancrombie.com, for my podcasts and videocasts. Good night, everybody.